We've learned that Whitehaven are buying Blackwater and Daunia. This would have to be the mining sale process with the most articles I have ever seen. It was getting absurd, to say the least. And that activism really culminated. This London hedge fund called Blackwater Capital, which emerged relatively vocally against doing a deal to acquire these assets.
Mate, I don't think Mike has quite got the memo yet. If he wants to do proper activism in the mining space, he should have just come on the potty.
And Lithium Power International being taken over by Codelco.
Codelco, yeah, the copper major taking over a small lithium player. Super interesting.
G'day, money miners. I gave it a big booming voice, mate. I thought Matty's not going to be happy if he's away and he hears an intro that is just subpar. So I've given it my best shot. The money miners will notice things look a little bit different. We've got you're placed out in Melbourne at the moment. Matty finds himself in the luxurious down south. I want to say it's Bustleton. He's down there for a conference. I previously called it South by Southwest. It's not that. It's Southwest Connect. And you're, of course, in Melbourne. So we're doing this remote for the first time. How does it feel?
Mate, we have got some cracking news to talk about on our first fully remote chat. We're going to get into Whitehaven, the long-awaited deal. We've been hinting at this for a while, talking about it, rumours every other week since the beginning of the year, I think. So going to get into the deal. We're also going to chat about the upcoming AGM. So there's a few bones to pick from a few different shareholders, a few interesting resolutions up at stake. And then we're also going to talk about Lithium Power International. So they have sold themselves essentially to Codelco, and that deal's been valued at $385 million. It's been also rumoured for a little while. The share price has rocketed up in the last couple of months. And then lastly, we're going to close out on a bit more unfortunate news, actually, on Glencore's decision to close the Mount Isa copper mine. So it's not all being shut down. They're keeping zinc ops going, as well as the smelter and refinery. But we'll touch on that at the end of the show, mate.
Mate, to top it all off, we've got a wicked sponsor to thank for their for bringing you the show, and that's Anytime Exploration. I don't know what more you can possibly say about Anytime Exploration that hasn't already been said. Last plug, I feel like that would, just
what can you really add to elevation, to Matty's style?
Any job, it's just things are getting absurd. So what does Seamus actually do?
If you need anything, he's a jack of all trades, mate. Even the likes of Liontown, mate, they need a job done. Seamus Murphy is the one to call. He can tackle any job. Matty's fleshed out that he's well equipped to deal at any elevation, any part of the world. You need anything done in the world of exploration services, get in touch with Seamus Murphy at Anytime Exploration Services, our inaugural sponsor, mate.
Beautiful. I am thankful to Seamus. All right, mate, let's get into it. The first deal to talk about, mate, Whitehaven Coal. We've learned that Whitehaven are buying Blackwater and Daunia. So these are the assets being divested by BHP, and it's an interesting one to talk about. They went into trading halt this morning, and we had bloody prepared a whole piece to talk about this, just as if they were in trading halt pending some sort of announcement, but confirmed to be the buyer. And bloody mate,
I'm spewing.
We did all this work, and then they come out with the terms, and so we've got to redo all our bloody work. And anyway, we'll talk about what really matters, which is the deal. And
that's it.
So Whitehaven, they've agreed to buy the two mines, the coal mines up in Queensland from BHP, and this would have to be the mining sale process with the most articles I have ever seen. There's, every other week you'd seen a leak or an update or a valuation drop put out there in Data Room or Street Talk. It was getting absurd, to say the least, but the world's most interesting sale process, according to our incumbent media organisations, has finally. They're not going to know what to report about anymore because the deal's out, and we've got numbers to talk about. Notably, and this is the most important thing, I think, is Whitehaven stock is up 16% since the announcement. Well, it was hovering about 16%. It might have come off a little bit from there, but it's a massive, massive intraday move for a $6 billion company.
Mate, it's huge. I think they closed up about 12%. So like you said, a massive move for a company of that scale. And I mean, it's fascinating that is the direction it's moved in. There was a lot of loud shareholder discontent, but I'm stoked that we finally got some numbers to put to it. So when we did the big deep dive about a month ago, we were sort of speculating in that sort of US $3 to $3.5 billion for both of the assets, Daunia and Blackwater. Now, the number that's come out ultimately is 4.1 billion. And
well, that's the headline number that I give to it, but Whitehaven tries to spin it as US 3.2 because they don't add the last little bit to it. But
naturally they would, mate.
Yeah, exactly. If you're selling the assets, you call it 4.1. If you're buying them, you try and you call it 3.2.
But it's pretty important that not just that head number is recognised, but how the payments are made. Given the sort of nature of being a coal asset, how they sort of get financing, the terms are super, super important. So $2.1 billion up front, and then you got $1.1 billion in deferred. That was a sort of 500 plus 500 plus $100 million on the first 3 anniversaries from completion. And then it sort of rounds out with a figure that's capped at US 900 million, and that's contingent on certain prices being realised. And it's important also to note that those prices are being realised on what's produced at the assets, not necessarily a benchmark, given there can be a bit of divergence. So capped at US 350 million in 3 individual years, being financial year 25, 26 and 27, at a total of US 900 million.
What do you think when you first sort of saw the headline numbers there, JD?
Mate, to what you said earlier, they sort of stumped you at first. You read 3.2, you're like, oh, that's actually pretty good, mate. But then, you add up the sort of contingencies to 4.1. But then, like we said, the structure of it is super, super important.
It was always going to be about the structure in this one. It was, the value and the structure were sort of both really, really important, because it's one thing, how much do you pay? And then the second thing is, what are you actually kind of, how are you going to finance it, and what are the terms of that financing? That matters a lot in the context of a coal company where they have a high cost of capital. So you want to make sure the way you finance it is on as beneficial terms as possible.
They've had a high cost of capital a few years ago, and that's only gone up as interest rates have gone up as well. And then, getting into the terms of how the fundings come together, they're highlighting that it's going to be paid for by existing cash and then the US $900 million bridge facility. So that facility, that restricts dividends and distributions, as we both heard, Nate, listening in on the call. But it's quite particular. It expires on June 30, 2024, so in 8 or so months. And then they'll have to replace this with some sort of debt financing. It sort of remains to be seen. They're going to have to work on how that all comes together. But ultimately not that bad. The shareholders that we'd sort of spoken around in the past, Bellrock, they're going to be upset in terms of the dividends and the distributions being put on hold. But ultimately, are they going to be that upset with a stock price that's ticked up 15%? What do you reckon, mate?
I think before we go into what we think of the deal itself, and just to clarify that funding, right, that's the funding for how to fund the upfront portion of the consideration. Of course, the other parts of the consideration are because it's being paid. In some ways, it's deferred consideration. That's ultimately, you can think of the financing there being on BHP's balance sheet. So just a bit, I think let's just recap where we're at and where we got to, and why there was so much excitement about this deal from a media reporting perspective, shareholder activism perspective, and all the rest. So Whitehaven, they pre this deal, their portfolio was thermal coal, right? And thermal, if you just have thermal coal, there's a dominant view out there that you're going to trade at a discounted multiples. There's like less investors that are interested in you. So the strategy of Whitehaven was to get met in the mix. You can make of that strategy what you will as a shareholder, but that was the one that management had publicly been going after for quite some time. And there's not too many like producing met coal assets in Western jurisdictions that pop up for sale. BHP had been publicly selling these 2 assets for quite some time now, and Whitehaven Coal, they were always believed to be in the mix, but there was definitely a fair degree of interest peaked when they paused their buyback. The moment they paused their buyback, it really signalled to the market that they're having a really big crack, and then a lot of activism kind of was launched off the back of that one. And that activism really culminated in this London hedge fund called Blackwater Capital, which emerged relatively vocally in critique against doing a deal to acquire these assets. The chief investment officer there, Mike O'Mara, was often attributed to some quotes that appeared in media being in vehement opposition to both the deal initially, particularly to any dilution that might result of the deal, and in recent history in opposition to the remuneration resolutions at the upcoming AGM.
Mate, I don't think Mike has quite got the memo yet. If he wants to do proper activism in the mining space, he should have just come on the potty. What do you reckon?
I insist. I bloody mate. I tried everything. I sent him like 2-3 emails. I tweeted about being in London. Can someone hook me up with Mike O'Mara? I called him out on the potty. I messaged people that I knew him, and mate, I got nothing in return. I think the London hedge fund world is particularly quiet. They keep a very secretive aura to them, these London hedge funds. Like some of them literally have like a one-page website. You can't find anything about the hedge fund. The people barely have LinkedIns. Mate, I can't even find a picture of Mike O'Mara on the internet. So I don't yet know if he exists. But I'd love to see the people who embark on these activist campaigns. I think in 2023, an activist campaign, like for it to really kind of be punchy, it needs a face. Like think of how we consume our media these days. You've got to have a minimum of voice, and it's like got to be your voice. It can't just be like text on a page. That's not how we consume our media these days. That's why we've got a podcast. And so, Mike,
agreed, mate.
Get with the memo, mate. Come on the podcast.
Yeah, I've got a lot of respect for that sort of secrecy. And I mean, given that they were sort of dominantly invested here prior to the transaction in a thermal coal business, big London hedge fund, it is not entirely surprising how private he is, but nevertheless, he should do the right thing next time and come on if he wants to get anywhere with his activist campaign, mate.
All right, well, let's talk about what the money miners care about, which is not our attempt to get in contact with Mike O'Mara, but more what we think of the deal itself. So let's look at the deal. The positives I'm keen to talk about. Firstly, the market likes it, and that's the most important thing. So the price paid and the funding structure, as mentioned, is like that's what we've got to sort of hone in on in our commentary here. So like the great thing I think is that they're using BHP's balance sheet for a good portion of it. It's obviously there's the 1.1 billion in deferred consideration. But if you kind of also think about the contingent consideration, that's also being paid on a deferred basis. So, that obligation, for all intents and purposes, is not something that is like a debt instrument that Whitehaven have to wear accruing interest at some exorbitant rate purely because they're a coal company and the cost of capital is absurdly high. So it's a good outcome that there's a huge degree of kind of reliance on BHP's balance sheet for a substantial part of it. Another positive, no equity. I think the market sort of cooled on the prospect of equity being part of this deal a few weeks ago, and positive to see that sort of follow through on the permutations of the deal. I do wonder if absent the activism, would we have seen a different outcome there? Because I'm not quite sure what the answer is to that one. I wasn't inside the doors of the deal, but I am curious the impact that sort of activism actually has on the way that the final deal we see put to market kind of emerges. Then we're going to look at the valuation, so price paid. I'm going to leverage the analysis put out there by Respeculator. He's written an article about this, and what he does is, I think it's a fair way to look at it. He assumes all of that contingent and deferred consideration is paid. So the stuff that's linked to price, his perspective is it's quite a low price hurdle. So just assume that does get paid. And then he discounts it on the, first, second, third anniversary accordingly at a 20% whack, which seems reasonable for a coal miner. And then in present value terms, what's the price paid? US $3.57 billion. So on his numbers, Whitehaven Coal, so the company pre-deal was trading at about 3.5 times EBITDA. That's on his numbers. which are basically using a long-term US $140 long-term price for thermal. And then he also on his numbers, he's saying, look, this acquisition on Blackwater and Daunia is actually priced similarly, and he's using US 200 per tonne for long-term met coal there. So 3.5 times EBITDA, both what Whitehaven was trading at and this acquisition's priced at. When you factor in the fact that they're picking up met coal assets, if you subscribe to the value premium that should be attributed to met coal, then he sees it as an attractive price paid. The negatives, of course, because you have to finance this and your cash flow in the interim while you're servicing the debt and also the deferred consideration pieces, it hits your capital allocation. So buybacks are paused temporarily. Buybacks are paused, dividends are paused while the bridge loan is in place. But there is some guidance around what capital returns will look like and some signalling that the capital distributions can come back in some permutation and some parameters around that, which is a positive.
Yeah, and there's a few other things to sort of mention on the deal, mate. They've moved heavily away from being a thermal coal producer to a met coal producer now, and there's a strong likelihood that means a few more funds can buy in. Perhaps that's what we were seeing today, given that well over 50% now of the production in the going forward is going to be for a met coal product. Maybe that opens them up to a broader investment community, and maybe that allows them to be sort of marked up on a higher multiple.
Yeah, looking at the trading activity today, I was thinking a little bit about this one, JD. It's like you see a lot of volume done today. Price jumps up immediately on announcement. I got the impression that there were a lot of investors on the sidelines waiting to enter Whitehaven, but being a little bit concerned about the M&A overhang. And then at least we've got the information now. Investors can make that decision whether the terms are attractive or not. A lot of investors make the decision that it was attractive. They enter the stock. And then there's also the potential that some of the investors on the sidelines, if there were institutional funds that had some restrictions around entering purely thermal coal producers, then Whitehaven, given it the diversity of its portfolio to have met in there now, warrants those flows to enter, and maybe some of that played out today.
Yeah, exactly, mate. And then on the sort of synergies, they're worth touching on as well. So you got Winchester South. Maybe they can get that one going. There's going to be synergies with the assets in Queensland. It probably puts Vickery, another one of the sort of development projects that Whitehaven have on the back burner. They might not need to sort of go forward with that one. And there was one other sort of pointed question on synergies that got put forward during the Q&A today, and that was regarding potential dealings with Stanmore, given the proximity to Stanmore's assets and between Daunia and Stanmore. So, I mean, the straight up answer from management today was that's they need to bed down this deal. They've got financing, like we've touched on, to sort out and everything. But they really didn't do a good job denying it all. They did acknowledge that it does make a lot of sense. So I'd sort of pay a bit of attention to that, and maybe in the future, given the synergies with Stanmore there, they could get something going to extract more value for each shareholder base there.
And then let's touch on the shareholder activism we've seen in the lead up, because everyone knows that I love shareholder activism when it's grounded in merit. There's some shareholder activism you look at and you think, okay, but this was a really interesting one, right? I mean, especially in recent days, like the last week or so, I think we've seen what looked to be a very kind of coordinated campaign focused on Whitehaven's upcoming AGM. Now that's scheduled for the 26th of October, so a couple of short weeks away. There'd been this website that had been created. I think it was Fair Shareholder Returns. There have been these ads on LinkedIn we've been noticing. JD will flash them up on screen at the moment. There's been ads on the Letter of Intent M&A newsletter. There's basically been a bit of a coordinated attempt to encourage shareholders of Whitehaven to vote against some resolutions at the AGM in relation to remuneration. First was against the remuneration report itself, and the second was against the grant of a single incentive plan awards to MD Paul Flynn. I think the reason we're talking about some AGM activism at the same time as an M&A transaction is because the two are related, and the link is something worth digging into.
Agreed, mate. So I think Mike O'Mara at Bellrock, who we touched on before, I think he summed up the link best between the REM report and the mines acquisition. And I'm going to quote him here. He said, under Whitehaven's current plan, the company could destroy the share price, cancel or reduce dividends, stop the share buyback, and still pay healthy bonuses to management. So that really encapsulate their feelings about these new packages. And we touched on this whenever we spoke about Whitehaven 3 or 4 weeks ago, mate.
We
tried to, I mean...
It was interesting, right? Because I think
it was a nightmare.
Well, yeah, it was. The info that rolled out, I did a bit of a tweet thread on it at the moment I saw the notice of meeting go up, and you looked at the way that that incentives were being tied to metrics like EBITDA, not on a just EBITDA in general, and metrics like that, ROM production in general, as opposed to sort of shareholder return metrics, and I think like metrics like that, you obviously can achieve achieve your incentives by doing M&A at any price, and I think that's something that you have to discourage. Like notwithstanding the deal and market reaction of this transaction today, we the Money and Mine team stand for maximal alignment between shareholders and management, and in my mind that looks like management owning plenty of stock themselves and incentives tied to total shareholder return. Interestingly, in the activism that we've seen pop up, presumably spearheaded by Bellrock themselves, we saw the major proxy advisors, ISS and Glass Lewis, actually divided in their recommendations, about these resolutions. And as an observer to the activism, I think, the fight against the remuneration resolutions at the AGM was probably an attempt by the activist shareholder or shareholders to influence the M&A deal.
Mate, there's one more thing worth touching on the deal itself. So, once Whitehaven was in Holt this morning, there was a statement that came out of Bellrock, and they were talking about a shareholder vote on the deal. Now, we've seen this in the past, haven't we?
Yeah. I mean, we were all in a bit in limbo when Whitehaven were in trading halt. BHP are referring to them as the preferred bidder, so you don't know how advanced things were at that stage, how was financing locked in at that stage. So there's a bit of speculation. Bellrock are quoted in the AFR in an article, and they're quoted sort of advocating for whatever deal is released, that there's a shareholder vote in relation to the deal. The way this works is if the scale and nature of your business changes by virtue of an acquisition or disposal, then you're required to notify ASX, and then ASX will let you know if you need to include a shareholder vote or not. So in this case, you can assume that that Whitehaven sought advice from ASX, given the scale of their business did meaningfully change. But the conditions of the deal and everything that's rolled out, there's no shareholder vote actually tied to it. But you're right, there is precedent, mate, for including a shareholder vote, even if ASX doesn't require you to include it. Even in the midst of some shareholder activism, remember the battle for Leonora, JD, when Genesis was bidding for St Barbara's Leonora assets and Silver Lake lobbed a bid over the top? St Barbara shareholders were...
Mate, how could I ever forget?
Exactly. And Barb shareholders were publicly not happy that St Barbara were refusing to let Silver Lake do DD. So we had the shareholder activism there check, and in St Barbara's case, a disposal of assets instead of an acquisition. But I remember reading this quote from one of the announcements from St Barbara at the time. It said, St Barbara shareholder vote on the Leonora asset sale. In April 23, Barb's received confirmation from the ASX that Barb's shareholder approval for Leonora asset sale under ASX listing rules would not be required. Nevertheless, the board of St Barbara has voluntarily provided its shareholders with the opportunity to vote on the transaction at the St Barbara EGM as a matter of good corporate governance. So maybe Whitehaven could take a leaf out of the exemplary corporate governance that we see from St Barbara.
Exemplary, mate. So why don't we just, share a couple takeaways or what you sort of think all up, given that we're sort of at the end of this deal, this sort of long in the making deal.
All right. So first one, I'm stoked that Whitehaven shareholders are getting a deal on terms that are clearly being rewarded by the market. Those that had concerns about the deal, they appear to be, relatively alleviated by the intraday performance of the share. So, that's great. Second takeaway, I do hope shareholders still advocate for remuneration to be maximally aligned to their own interests. And my third one, mate, I'm disappointed the deal looks to be over without us getting an activist shareholder on the podcast. One of these days, JD, they'll come on.
I'd echo all of them, mate. Like we sort of said at the top of the show, the price and the structure of this one were super key, and shareholders look to be happy with it. And that sort of said, I'm keen to see how this vote goes next week.
The other deal that popped up. This is not coal. I mean, this is a much different type of metal out there. This is lithium, and Lithium Power International being taken over by Codelco.
Codelco, yeah, the copper major taking over a small lithium player. Super interesting. So it's a cash takeover, priced at 57 cents per share. So it's a binding scheme. The fully diluted equity value of LPI is Aussie $385 million. So not a bad little number. And the money miners might remember LPI. We spoke about them a couple times. There'd been rumours of this deal not too long ago, and then we'd spoken about them a few months back when they'd sold for $30 million tenements in and around Greenbushes. So they've made a bit of news, and now they have sold themselves. They quote the deal at being at a 119% premium to the undisturbed closing price, which was 26 cents.
You normally see a premium like that and you think, well, geez, everyone must be happy. That's a big bloody premium. But I think there's more to this one, isn't there?
Absolutely, mate. At first glance, you'd think, wow, that is a ripper premium. So 136% premium to the undisturbed 30-day VWAP up into that undisturbed day. So the deal has board approval. Now, in that board, you've got this guy, Martin Borda. He's a Chilean billionaire. He controls this group called Minera Sala Blanco, and they are 28.25% shareholders. So, like I said, he's on the board. He's a director, and the board, with him included, owns 32.5% of the company. So, I mean, the first lithium deal for Codelco, it's sort of super interesting to see them make these moves, how they're going to sort of go about it. We saw all the talk about the Chilean lithium policy about half a year ago now. And given that Codelco is a state-owned entity, it's interesting that, Lithium Power International is the first move that they make. It's
really, really interesting, and they're an absolute massive player in the copper. But whenever you see a state-owned entity like Codelco sort of competing, you do think of them as impossible to compete against for anyone else. And I think the first thing I want to ask you though, JD, is what do you make of the price that LPI is transacting at here?
I mean, to look at the price, we should run through the updated DFS. So this came out in the first quarter of 2022, mate. So the capex was US $626 million for an NPV of US $1.4 billion, and they were going to be producing 15.2 thousand tons of lithium carbonate equivalent for a 20-year life. And on the sort of valuation, we'll flash up this chart from Hoops, who we quoted not too long ago. He sort of put together a bubble chart on lithium M&A prices, and on the metrics that he shows, he's got on the y-axis the grade. So on the left-hand side, you can see the hard rock grade. On the right-hand side, the equivalent sort of grade for a brine project. And it sort of values this deal pretty middle of the park, like $190 per ton lithium carbonate equivalent. I'll sort of pull up a couple similar type of deals. You got the Zijin deal with Neo, and it's similar in terms of being a brine asset, South America. They're at the same stage, that sort of DFS or bankable feasibility study stage, and that was on $135 per ton, so a bit cheaper. The Rio deal with Rincon, which was done a bit over a year ago now, similar again in the nature of the deal at $105 per tonne. And then another one is Ganfang's deal with Lithia, so also in Argentina, this one in that sort of lithium triangle. And that was at $404 per tonne. So, you know, the comps aren't perfect. They're at various stages. The lithium market has been, you know, quite up and down over the past 2 years or so, but it just gives you a sort of rough idea of how things have been priced at the sort of takeover stage out there. And I mean,
it's interesting, right? I'm sure LPI had advisors appointed who were trying to, you know, seek to maximise value and ruffle up some interest from alternative players. And I wouldn't be surprised to learn that other people, you know, were interested. But because it's Codelco, like, do you think anyone's actually going to bid up the price here, JD?
Yeah, I mean, it leaves them in a hard spot. Like we talked about that premium, that jump up, but for longer term shareholders, you know, the last placement they did was at 60 cents. So that was $25 million a bit over a year ago. And, you know, getting to where we are now today, like you said, what's the competition? Codelco, you know, they got land in and around the asset. Who's going to want to rile up Codelco? That as a strategic move, if you're going to want to be a producer of lithium in Chile, then you don't want to get on the wrong side of an entity like them. Maybe you do want to partner with them down the track. You know, maybe the likes of an SQM or an Albemarle are thinking those sorts of things. Maybe they could sort of lend their expertise in the lithium market, but is now the stage that they do it and come in with a bid over the top? I mean, it seems pretty unlikely to me, mate. And on the call earlier today, the management team, they sort of said, in speaking for about 70% of the register, that 70% was happy with the deal. So, I mean, maybe we see some hedgies from across the world come in, hold on for a little bit, but people that are actually going to come in and hold up the deal, that seems pretty unlikely to me.
Yeah, and I mean, when you've got a binding scheme, you've got very super high degree of certainty. It's, you know, I mean, it's really tricky to get out of a scheme, and so if it was a takeover offer, it's a different story. But scheme's a pretty tricky one. There's much better deal certainty. But on your point on hedges kind of coming in, I always look at these deals now when they're announced and think of that M&A arbitrager and what are they going to get up to? Are they going to see a return? What do you think on that front,
mate? I mean, first thoughts are the exact same. You know, the stock was trading 53, 54 cents. And it was a cash bid at 57 cents. And it really goes to what you said before, mate, about the deal being pretty tight, you know, a binding scheme. And you can look through the terms, you know, as a 100-odd page announcement. And there's not really much that's going to let Codelco get off the hook if, for whatever reason, they have a change of heart. So, like you said, you know, we've now seen behind the curtain on how it all works, the risk arb or the event-driven funds, a couple of different strategies that might get involved. So, I mean, just back of the envelope sort of math, if you're looking between 54 and 57 cents, that's a 5.5% return. The implementation date is the 8th of February. So what's that, 3 or 4 months? If you annualize that, you're talking about 18%. I think they closed the day at 53 cents. So that 18% is a touch higher. On those sorts of, you know, numbers, the risk reward trade-off here, it looks quite compelling, and I'm sure in that large amount of volume that we saw today, you'd see a lot of those sorts of groups coming in. And I mean, there would have been, on the flip side of that, people that were buying into the rumour a month ago when it was first sort of announced and thinking, hey, you know, this is going to become something good. Codelco are going to come in and buy them out. And they would have jumped in at whatever they were trading, 30 cents, 35 cents. And for a month or so's work, they'd be pretty happy to cash out here and let these other sort of shareholders take it through to completion.
Couple more things to chat about, mate. One is Glencore. Like, what are they doing at Mount Isa?
Yeah, it's not great news for the community there at all, is it, mate? So 1,200 jobs are, I mean, that is the number that they've sort of said will be let go. On the positive side of that, it's in the second half of 2025 that we're going to see the Mount Isa copper mines shut. So a couple years advance, which is good of Glencore to do. They have said that the refinery, which is in Townsville, as well as the smelter in Mount Isa, will continue to operate. So they're getting enough, commodity from third parties to keep that running, and I'm sure the margins on that are incentivizing them to keep things going there. So in all likelihood, it's a combination of the grade winding down. It's been going for 60 odd years. It's getting to a natural type of end. Costs have been moving higher, so the operation's just not that profitable anymore. They did say that the zinc part, so Glencore's zinc, is not going to be effective. So, all up, they said they employ roughly 3,500 people across the region. And like I said, 1,200 of those jobs will be going out in late 2025. So, here's hoping that there's opportunities around. We've spoken about a tight labour market quite a bit. So hopefully the people let go, and in the sort of intervening 2-year period, they can pick up jobs at various other operations and it not be too much of a disturbance. Yeah,
it's always horrible to hear when a lot of people lose their jobs, and the ramifications that has on mining towns is substantial. As sometimes these sort of towns get really feel the after effects of it. But it's an unfortunate kind of part of our industry. There's one
very
more.
Much so, mate. Mount Isa is a mining town.
Yeah. One more thing I wanted to mention. I noticed Liontown, they're in suspension today. We obviously talked quite a bit about them yesterday. The suspension today is just what happens when you've been in trading halt for more than 2 days. But in relation to our coverage yesterday, I've been told by someone I trust, you know who you are. You better not be leading me astray, but I've been told that the equity raising headlines we've seen out to date from AFR and Data Room are BS. So make of that what you will.
We'll hold him to account. Awesome, mate.
Great to chat as always, JD. I'm pumped to release part 2 of Rusty tomorrow.
Mate, a couple great interviews to share Thursday, Friday with the money miners, and I'm also keen to get a bit of feedback on the bit of analysis we did today, and interested to see how the market sort of rates Whitehaven going forward. A few things to look out for.
Beautiful, mate. All right. We'll thank our sponsors, Terra Capital, Anytime Exploration, JP Search, K-Drill, and SMEC. So thank you very much,
Thanks
guys.
Thanks a bunch, guys.
Hootaroo.
Hootaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.